The semiconductor industry was one that saw a tremendous boom in the wake of the COVID-19 pandemic. This dynamic growth explosion was hardly felt to this degree by any other sector, given surging demand with the rising trend towards remote work and e-commerce. Since then, semiconductor companies have experienced somewhat of a dynamic shift, as well as a number of macroeconomic challenges. Geopolitical tensions, as well as supply chain disruptions, have caused investors hesitance in parking their funds. Despite these conditions, however, analysts and economists maintain that the semiconductor opportunity into the long term remains golden. Semiconductors lie in the backbone of all innovation, and as the world progresses towards digitization and AI solutions to everyday challenges, semiconductor companies will continue to dominate the mainstream. In light of this, we present 5 top semiconductor stocks that hold the most promise, and thus are ideal candidates for any investor seeking exposure in this dynamic domain. The first stock on our list is Broadcom Incorporated, a semiconductor company that has a significant lead on all its competitors by a wide margin, and trades under the ticker AVGO. Broadcom is a leader in semiconductor design and development. There are 2 fundamental strengths to Broadcom, which make it superior to other semiconductor investment options. The first is its exceptional top-line growth, in some of the toughest circumstances the industry as a whole is sailing through. In its most recent earnings release, AVGO showcased revenue growth for the quarter at 25% on a year-on-year basis, which was spectacular in terms of growth. During this very quarter, some of the largest players have been toning down their guidance, and seeing a slowdown in performance. Net income for the company also rose tremendously from $4.38 to $7.15. The second strength inherent to the company is its consistently high free cash flow, which remains to be a large portion of its gross revenue. This substantially adds to the company's overall financial sustainability, while enhancing prospects of business growth. To add, Broadcom Incorporated is presently looking to acquire the software solutions company, VMware Incorporated, which will further enhance value and diversify some of the systematic semiconductor risks it is exposed to. Overall, AVGO is a rising star that is showing tremendous results in the toughest of times. The stock is a great pick for any investor's semiconductor portfolio. The second stock on our list is of the micro-cap semiconductor company, Everspin Technologies Inc, which trades by MRAM. With a market capitalization of a mere $130 million, Everspin is a tiny player, aiming to make its mark in a realm dominated by giants. Despite this, its prospects seem bright, given its innovative approach to MRAM technology, which delivers its significant differentiation. These specialized RAM chip semiconductors see significant utility in AI tools, industrial automation, as well as in 5G technologies. As a result of its high-quality product offerings to the various semiconductor markets, Everspin saw its revenue climb by 24% on a year-on-year basis in its most recent quarter. Even more incredible was its earnings per share, which ballooned from 1 cent to 8 cents. Building on the strengths of its specialized and differentiated MRAM technology, Everspin is actively enhancing its product pipeline, delivering low-density STT-MRAM products, as well as innovative field-programmable chips. The company's 10-year experience in manufacturing gives it a substantial edge, which allows it to successfully execute upon these ambitions and launch them to market. Owing to these developments in product offering, it is apparent that the growth runway ahead of Everspin is substantial, and has not yet peaked. For this reason, MRAM is a great investment opportunity to consider. Before we move on to the next stock, we'd like you to know that we offer a morning newsletter to our email subscribers. Prior to the market opening, we send our subscribers an informative email about which stocks are moving, or about to move. You will get an overview of key earnings reports, recent insider transactions, analyst upgrades, and downgrades. To take advantage of this offer, you can find the link in the description box. If you're still with us, it means you've liked our video. Do click on the like button to show your support. The third stock on our list is Taiwan Semiconductor Manufacturing, or TSM, which is perhaps the most well-known integrated circuit developer in the world, serving the global markets at large. Investors have been somewhat wary of getting a hold of this semiconductor kingpin, given geopolitical scares and tensions with China in the South China Sea. As a result, TSM has seen a price depreciation of 40% since the start of 2022. Given its laser focus on innovation, the company's expertise lies in the development of the highest quality chips that find use in the most advanced tech facilities across the globe. Its 5nm chips are a game changer for some critical industries, and the company is further working to develop and roll out 3 and even 2nm chips in the future. Given that the price shed TSM has experienced is largely due to headline panic, rather than fundamental weakness, its valuation is presently highly attractive. Its top and bottom line figures improved by 35% and 66% respectively, as per its most recent results, on a year-on-year basis. To add, its cash holdings as per its recent balance sheet, stands at a whopping $42 billion. This semiconductor champion is not getting dethroned anytime soon, and its strong fundamentals and prospects appear truly game-changing. The stock therefore, is a screaming buy. Up next, we take a look at KLA Corporation, which trades with the ticker KLAC, and specializes in electronic yield management, process control and process enabling applications. Looking back at the prior year, it is evident that KLA had a successful year, despite the severe macroeconomic headwinds. Just looking at its recent figures, we see 33% top-line growth, as well as an improvement in gross margins from 59% to 61%. Similarly, the operating margin increased from 36% to 40%, whereas the net margin jumped from 30% to 36%. It is evident that as KLA is capturing further market share and scaling up its operations, it is improving its margins through economies of scale. Apart from the fundamental strengths listed up above, KLA is one of the most shareholder-friendly stocks on this list, which is committed to delivering value to shareholders. Its go-to move, in regards to excess capital, is share buybacks, which translates to increasing prices of its stock. This enables its shareholders to benefit by capital appreciation. Similarly, its 1.7% dividend yield is modest considering the degree to which the company is expanding its global operations. KLA therefore delivers the best of both worlds, and is thus a highly compelling pick. The final stock on our list is the Dutch semiconductor assembly equipment player, BE Semiconductor Industries, which trades in the OTC markets as BESIY. In terms of its addressable market, the company boasts a market share of 32%, which puts it at the forefront of its game. BESIY is headquartered in the Netherlands, whilst it has manufacturing facilities that span 6 different countries. Given the critical nature of its offerings to the production of a variety of semiconductor forms, it would be no understatement to say that BE Semiconductor is the backbone of its industry. Its customer ecosystem is diversified, and includes some of the top blue-chip players such as Samsung, Dell, Lenovo, Motorola, as well as many others. Given this critical, yet strategic placement, BESIY is positioned to climb high with the wider semiconductor industry, and with tech innovation itself. The company's recent earnings show top and bottom line growth figures of 36% and 38% respectively. With a gross margin of 60%, the company stands highly profitable, and well able to sustain its growth, moving ahead. BESIY is the perfect stock for anyone seeking maximized exposure to the opportunities of the wider semiconductor realm. The fact that the stock is down 53% in the last 12 months, points to a tremendous buying opportunity for value seekers. That's all from us in this video. We hope the insight we aimed to deliver has proven valuable to you, and would allow you to ensure your portfolio is well exposed to the promising semiconductor opportunity. We would love to hear your feedback about our list in the comments below. To gain a deeper insight into different stocks that are fit for various investment strategies, be sure to check out our website, stockstelegraph.com.